You work hard, you pay income tax, you pay sales tax. You buy a house, take on a mortgage, and spend decades paying it off. And yet, here's the uncomfortable question no one likes to ask. Do you really own your home? Because the moment you stop paying property tax, the county can take it back. No missed mortgage, no crime, just unpaid rent to the government. That's what property tax really is, rent disguised as ownership. And right now, that rent is exploding across America, quietly, relentlessly. Homeowners open their tax bill, sigh, complain for 5 minutes, and pay it anyway. But here's the part that should make you stop everything. There's a very real chance your property tax bill is legally wrong. Not unfair, not annoying, wrong. The system doesn't calculate your home's value with precision, it guesses. And those guesses often cost you thousands every single year. So why do so few people fight back? And how are some homeowners quietly slashing their tax bills without lawyers, without moving, and without breaking the law? That's exactly what we're breaking down today. Hit subscribe, stay with me, and let's expose the game you were never taught to play. Here's the truth most homeowners never hear. Your property tax bill is not calculated with precision. It's estimated. County assessors are not walking through your home. They're not opening your cabinets, checking your windows, or looking at that aging roof. Instead, they rely on mass appraisal systems, algorithms designed to value tens or hundreds of thousands of homes at once. And that's where the problem begins. These systems take a few broad inputs: square footage, number of bedrooms, lot size, neighborhood sales. Then they compare your home to recent sales nearby, often homes that were flipped, renovated, or upgraded. The computer sees a beautifully remodeled house down the street and quietly assumes yours is just as nice. But here's what the algorithm can't see. It doesn't know that your kitchen hasn't been updated in 25 years. It doesn't know your windows rattle when trucks drive by. It doesn't know your bathroom still has tile from the Reagan era. To the system, your house is theoretical. To you, it's very real. According to recent analyses, over 40% of U.S. properties are overassessed. That means nearly half of homeowners are paying taxes on a value their home could never realistically sell for. And yet, most people do nothing. Why? Because the system is designed to discourage action. Appealing sounds intimidating. People assume it requires lawyers, time, and stress. So they grumble, shrug, and write the check. But here's the statistic that flips everything upside down. Only about 3 to 5% of homeowners ever appeal their property taxes. But among those who do, 30 to 50% win. Let that sink in. Those are not bad odds, those are casino shutdown odds. This isn't about gaming the system. It's about correcting an error that already exists. Property tax works like a lazy tax. It quietly extracts money from people who don't push back, year after year, compounding over time. I'm going to show you how some homeowners collapse their tax bill almost overnight by changing one line on a form. When most people hear the phrase agricultural tax exemption, their brain shuts off. They picture massive ranches, tractors, thousands of acres somewhere in the Midwest. And they think, that's not me, I live in the suburbs. That assumption is exactly why this strategy works. Because the tax code doesn't care about your lifestyle, it cares about land use. For decades, large developers have quietly exploited this. Before building anything, they temporarily change how the land is used, often by leasing it to a cattle grazier for a short period. The result? They pay a fraction of the normal property tax. That's the mindset shift you need to understand. You don't need to look like a farm, you need to function like one, on paper. In many states, especially Texas, Florida, and Colorado, homeowners can qualify for massive tax reductions by switching their land classification to wildlife management. And no, you don't need cows, you don't need acres of corn, you don't need to quit your job and buy a straw hat. Wildlife management can be as simple as supporting native plants, preventing erosion, clearing invasive brush, installing birdhouses or nesting boxes. In some counties, doing this correctly can drop the taxable value of your land by up to 90 or even 98%. Then there's beekeeping. In many jurisdictions, placing just 2 beehives on your property legally qualifies it as agricultural use. You hire a local beekeeper to manage them, costs a few $100s a year. And suddenly your tax bill drops by thousands. You get honey, you support pollinators, and the county gets less of your money. This isn't cheating. This isn't a loophole you sneak through. It's a rule that exists and rewards people who understand how the system actually works. And once you realize land use drives taxation, you stop thinking like a homeowner and start thinking like an asset manager. Next, I'll show you how even a normal house with zero land can still turn its flaws into a tax weapon. Now let's talk about a strategy that works for almost everyone. Even if you live on a tiny lot, and even if you don't have land, and even if your house is brand new on paper. This one is called the ugly house strategy. Here's how property tax assessments actually happen. The assessor doesn't come to your house. They don't walk through it. They don't see reality. They use a mass appraisal system, a computer model that looks at surface-level data, square footage, bedroom count, zip code, and recent sales nearby. If a fully renovated house down the street sold for top dollar, the algorithm assumes your house must be worth something similar. That's called sales chasing, and it creates massive errors. Because the computer doesn't know. Your kitchen cabinets are from the 90s. Your driveway is cracked. Your windows leak air in the winter. Your bathroom works, but barely. In the appraisal world, this has a name, functional obsolescence. It means the house still functions, but not by modern standards. And that reduces value. Here's the key insight most homeowners miss. The things you hide when selling a house are the exact things you should highlight when appealing taxes. Your outdated features are not embarrassments, they're tax assets. And the data backs this up. Only about 3 to 5% of homeowners ever appeal their property taxes. But of those who do, 30 to 50% win. Not because they argue, not because they complain, but because they bring evidence. Photos of water stains, photos of worn floors, photos of that one room everyone uses as storage because it hasn't been updated in years. You're not asking for a favor, you're forcing the assessor to admit one simple truth. Your house is worth less than the algorithm thinks it is. This strategy doesn't require land, it doesn't require loopholes. It requires honesty and documentation. And next, I'll show you the strategy that makes me the angriest of all. Because it's not clever, it's not complex. And millions of homeowners are leaving this money on the table for no reason at all. This next one makes me genuinely angry. Not because it's complicated, not because it's clever, but because it's free money and millions of homeowners simply forget to take it. It's called the homestead exemption. And for older homeowners, the senior freeze. Here's what's happening behind the scenes. County assessors openly admit that a huge percentage of homeowners never file for the exemptions they legally qualify for. In some major counties, nearly 1/3 of homeowners are overpaying every single year, purely due to inaction. Why? Because the government is terrible at marketing. They don't send you a letter that says, "Congratulations on turning 65. Here's your permanent tax break." They don't remind you, they don't follow up, they quietly hope you forget. In many states, once you reach a certain age, 65 in most cases, 55 in some, your property's assessed value can be frozen permanently. That means even if home prices double, your tax base doesn't move. In some states, school taxes freeze the moment you turn 65, assessment values stop increasing. Or you receive an automatic reduction just for living in the home. This is not the welfare, this is not a handout. You paid into the system your entire working life. This is your dividend. And yet, year after year, people voluntarily donate thousands of dollars to local governments, simply because they never filed a form that takes 10 minutes to complete. Here's the uncomfortable truth. If you don't claim your exemption, no one is coming to save you. The system assumes silence means consent. So take 5 minutes, go to your county assessor's website, search homestead exemption. Because this isn't about being aggressive. It's about not being careless with your own money. And next, I'll show you what to do, even if none of these strategies apply to you. Because there's still one last backdoor most people don't understand. Now, let's say none of these strategies work for you. You don't have land, your house is new, you're not eligible for exemptions. Does that mean you just lose? Not anymore. Because quietly, almost buried in political noise, the rules changed in a way most homeowners still don't understand. For years, property owners in high-tax states were boxed in by the SALT deduction cap. State and local tax deductions were limited to $10,000, no matter how high your property taxes climbed. That meant even if your county crushed you with a massive tax bill, the IRS offered very little relief. But that ceiling has now been raised dramatically. The SALT cap has jumped from $10,000 to $40,000. And that changes the math. This doesn't lower your property tax bill directly, but it reduces the damage. Think of it as a financial shock absorber. If you're itemizing deductions, a much larger portion of what you pay in property taxes can now be deducted from your federal income. That means lower taxable income, lower federal tax liability, more cash staying in your pocket. It's not perfect, but it's real. And here's the important framing shift. This isn't political, this is mechanical. You don't have to like who passed it, you don't have to agree with the policy. What matters is understanding the rules as they exist today, not as you wish they were. Too many homeowners ignore this step because they assume, well, the county already got me. But taxation happens in layers. If one layer won't move, you optimize the next one. That's how professionals think. And once you combine assessment appeals, land use strategies, exemptions, and federal deductions, you're no longer a passive payer. You're actively managing your largest expense, housing, like a business. Because here's the bottom line. Property tax is designed as a lazy tax. It extracts the most money from people who don't question it. And the moment you stop being passive, the system starts leaking money back to you. In the final section, I want to zoom out because property taxes are just one leak. There are others, quiet ones. And if you don't find them, they drain your wealth while you sleep. Property taxes aren't just a bill, they're a behavioral test. They test whether you're passive or paying attention. Because as you've seen, the system is full of friction. Overassessments that rarely get corrected, exemptions no one reminds you to claim, deductions most people don't fully understand, and all of it compounds year after year. The homeowners who win aren't smarter, they're not richer, they're simply more deliberate. They treat their home like what it really is, their largest balance sheet asset. And property taxes? Just another operating expense to manage, challenge, and minimize legally. Now, an important disclaimer. This video is not tax advice. Rules vary by state, by county, and by individual situation. Always verify details with your local assessor or a qualified tax professional. But here's what is universal. Inaction is expensive. Property tax is a lazy tax. It profits from silence. And the longer you ignore it, the more wealth quietly leaks out of your household. So here's my question for you. When was the last time you actually looked at how your home is being taxed? Not glanced at the bill, but questioned the assumptions behind it. If the answer is never, you're not alone, but now you're aware. And awareness is leverage. If this video helped you see your home and your taxes differently, hit like so the algorithm knows this matters. Subscribe if you want more clear-eyed analysis on how money really moves in this economy, and drop a comment below. Which strategy surprised you the most, or which one are you going to check first? Because taxes are just one leak. There are others, hidden liens, title issues, insurance gaps, that quietly drain your equity while you sleep. And on this channel, we hunt those leaks down. I'll see you in the next one.